Okay, welcome all to Financial Fitness Program. My name is Samir Bapat, and today we are going to learn about sectoral analysis. And I'm not going to analyze any sector. I'll be giving a very different perspective how to go about finding which sector is likely to lead in future. So the agenda for today's session is to find the sector which is likely to be a winner or likely to be the in the leading position in the coming days. And the reason for this webinar is the war going on in Ukraine. So I hope everyone is aware about the war which is happening in Ukraine right now. Can I have yes if you're aware that some war is going on in Ukraine? Russia has attacked Ukraine and there is a war going on. Yes? Okay, great. Now, how many of you think that, let's say, Russia stops its forces where as is basis, or how many of you think this war will end in next 5 to 10 days? Whatever negotiations may happen or something, will this war end in 8 to 10 days? Yes, no? Yes, no, okay. Some people are saying yes, and some people are no idea. Okay. Now, this war, let's look at it as a perspective from the war. And the war is not just limited to attack by the bombs, by tanks, by missiles, by planes. We have to understand the Ukraine war from the perspective of the world getting divided. Now, there was a Cold War, like after the World War, there was a Cold War. There was a war between US and USSR, the earlier Russia, and the entire world was divided into two parts. Either you were in on the side of Russia or you were on the side of USA. That gradually ended with the disintegration of USSR into Russia and different countries. That Cold War was sort of subdued. The world became more integrated over the period of last 20-30 years. The Cold War ended almost 30 years ago, and the world was more integrated. It was more interdependent, interlocked. Now, with Ukraine war, with Russia declaring war on Ukraine, with US, Europe, everyone jumping in, with the embargo being placed on Russia, with world again getting divided into two parts, again there is a likelihood that even if the active war is not there, Cold War will be happening for many days to come. There is a possibility that the Cold War is going to start, and or maybe very really active war may also start, but that will be very destructive, and then we cannot predict anything. But Cold War starts, then whatever integration of the businesses has happened, that will start getting like having lot of pressures, lot of businesses which are dependent on countries. Let's say India abstained from voting, so there will be some repercussions for that, some advantages for that. And we don't know as of now, as a common investor, we don't know what will be the repercussions and what will be the advantages for India. Agreed? So can I have yes from all of you if you sort of get the picture that even if the active war stops in, let's say, next 4, 5, 10, 15 days, the Cold War is going to start. The Europe, US are going to put embargo on Russia. Russia is going to retaliate in some other way and say, okay, I will also not support you, I'll not give you oil, I'll not give you lithium, I'll not give you this, I'll not give you that. And Europe is dependent on Russia for energy. There might be energy crisis in Europe. So there's a possibility of a prolonged Cold War where people don't cooperate with each other, the countries don't cooperate with each other and try to make each other suffer, not by dropping the bombs, by not cooperating with each other in other different sectors. Can we all agree on that? Yes. Okay. Now, as a common investor, for us it is very difficult to analyze, right? It is very difficult to analyze that. Okay, अभी इसका क्या impact होगा? Which country will be putting what on what, and what is the dependence, and what is what, and what is what? Do you agree that as a common investor we are always dependent on some news? That news always comes afterwards, and then we think, yeah, I didn't knew that. But this interdependence analysis, we neither have resources, neither have information to collect this data. How many of you agree that that is our limitation as a common investor? Yes, can I have yes if you agree? Yes, great. Now, who is our friend in stock market? Who is our friend in stock market, which will tell us what is likely to survive, which sector is likely to survive in the coming future? Perfect. I think the answer sheet is out already. The charts are our friend, and charts will tell us in all this confusion there will be some sectors which will be getting impacted in a big way, and there will be some sectors which will be able to do much better because of this war. And someone sitting down there must be analyzing, but ultimately he has to go and take action in stock market only. So let's do this analysis, and today's session is a way. So you can use it in, I'm giving idea, I'm giving one idea. You can use this idea in multiple way, multiple dimensions. You can use not only for the war, you can do it in a all the, like every time the market crashes, you can sort of do this analysis. So this is not a one time analysis. You will be able to do every time market crashes. You can do this analysis and take advantage of it. Fine, everyone okay? So let's begin. So what we will do is we'll briefly go through what is index, what are different indices, how to do relative analysis, and how to do relative analysis within indices, sectoral indices. Okay, so this is the four-step process. It's not a four-step process. It is actually two-step process only. The third and fourth point, how to do relative analysis, and how to do relative analysis within the indices. Okay, so let's go ahead. So what is the indices? Right now we are having almost 4,000 plus stocks in the stock market. Can someone tell me if the newspaper says Sensex is crashing? So exactly how many stocks it is talking about? If it says Sensex is crashed, 30, right? It is only 30 stocks which has gone down relatively. So what happens is Sensex is not the most accurate indication of the market. It is an approximate. It is taking samples, the leading companies it will pick up. They have picked up the leading companies out of 4,000 companies and made a barometer. If those companies share fall, they say market is falling. But it's not that all 4,000 shares are falling. Same way, if we say market is going up, that does not mean that all 4,000 companies are going up. Those companies and related industries might be going up, but still there is a possibility that some companies will be going down, some will be going up. So that's why indices is only a indicator. It's only indicating the general mood. It's a exit poll, or we can say opinion poll. In the current scenario, we can say indices are like opinion poll, or we can say exit poll. It may or may not be accurately reflecting the reality in the ground, but still it gives a good indication what is likely to happen. That is how index is used, and that is why the index were also created, to give general public one idea what is likely to happen in the, what is happening, what is the general mood of the market. So indices represent the general mood, the exit poll we can say, of the stock market. Everyone okay? So far so good? Yes. Okay. Now Our principle will be the take the strongest of the strong and take strongest of the weak. So the two principles we are going to follow. Now, since we have established what is indices, I would suggest to go, and I hope everyone is aware about this website, NSC website, nscindia.com. This you should always have this bookmark, and I will take you to the older side because I am more comfortable with the old version of this website. So it is mentioned here on the top, nsc ww1 nscindia.com. So let's go to that website. Now here, as you can see, it was much better arranged in that old website, or maybe I was using it for last 15 years, so I'm very comfortable with that. So I'll just take you through what all are the sectoral indices. So what happens is, indices, as you will see, nifty consists of 50 stocks. Where is it gone? Okay, here. These are the stock list of Nifty 50. So Nifty has gone down, we say. So these 50 stocks are part of Nifty 50. Same way, there are sectoral indices. There are top 10 sectors identified. Like these are the broadly defined sectors of Indian economy. And then there is an individual barometer for each sector. Can you see this page with sectoral indices here? Can I have yes? Yes. Okay. So the sectors in which the broadly the sectors are divided. The 10 sectors are Nifty Bank, Nifty Auto, Nifty Financial Services, FMCG, IT, Media, Metal, Pharma, PSU, Private Bank, and Reality. So these are the division of the entire 4,000 companies. Sort of at a higher level, they have made a division of 10 to 11 division of indices. So each sector, let's say if you want to know what is happening in IT, then you can refer to Nifty IT indices. So it will give you a barometer, it will give you an exit poll about IT, that okay, what is happening in IT in general. If IT is going up, it will tell you, okay, Nifty IT, if you watch, if it is going up, you mean to say, okay, IT is doing good. If it is going down, then in general, IT companies are not doing so good. So that's why these barometers have been made for us to understand what is happening in IT, what is happening in bank, what is happening in auto in general. So far, so good. Can I have yes if you are with me? Yes. Okay. Now, how this information is useful to us. So let's do one thing. What I have done is I have ये किसमें नहीं I think just hold on. Realty, okay. Realty I am having, just hold. Let me add. Just give me 1 minute. It is giving BS. Okay, I'll add this only for the time being. Okay, now okay, so let's see here. Let me, I think there should be a CNX utility. CNX. Here. Thanks. Okay. So let's add this and then remove this, and we'll move this here. Okay, great. Now CNX, CNX. Where is COX, COX? All are CNX only. CNX only. That is a nomenclature. Full form, I don't know. Okay, so now what we are going to do? What are we going to do? What are we trying to find here? Okay, so these are all reality. I have taken it on my watch list in Trading View. Now, what are we trying to do here? Analysis of this sector. Yes and no. What we are trying to do, see, in general, my question to you is, if if there is a tough time and you feel that the tough times are coming, will you sell off the precious items first, or you will sell off not so lucrative items first? Not so good, like whether you will sell off the if you are having gold in your hand, one hand, and you are having iron and some difficulties are coming, will you non lucrative item, right? Iron you will sell off, you will try to keep gold in your hand कि नहीं, this will ये अच्छा रहेगा, कल को काम आएगा, right? That is the principle, correct? So am I okay? Everyone okay? Like if some bad days are ahead or something, you have to sell off and book your profits, what will you sell off first? The thing which has less future, or which has more future? Non lucrative, right? Non lucrative will sell off. If in general, if big players are thinking something is not very lucrative, or which may go into trouble in future, if they sell, will it fall more? If the big players are thinking that okay, this sector might not be having so much bright future, and they start to dump because it's not very lucrative in coming 1 year because of the current situation of uh, the world, will the prices go down of those sectors, or it will go up? If the big players think यार इसका इसका कोई future नहीं है अभी, it will fall down, right? And the sectors which the big players or the analysts think that yes, in spite of all this global halla gulla, these sectors might be doing good, so will it go up or it will go down? Go up, like metal, absolutely, like metal it is going, so it will go up. So simple, principle is simple, so we'll use the same principle. We will start from Nifty, and what will be our comparison is 52-week high. So this is the highest point which Nifty went in last 1 year. If you see in last 1 year, this is the highest point where the Nifty went in October. And if you see from October, the highest point, the Nifty has gone down as of today, down by almost 16%. Everyone okay how I took that? Yes? Okay. Now what I will do is I'll just measure it on my sheet. So I'll write down, I'm just writing down how much each indices has gone down. Nifty has gone down by 16%. Bank Nifty has gone down by 23%. So I'll just note down 23. Okay, auto has gone down by 24% approximately. I'm taking approximately, I'm just writing down Then finance, how much finance has gone down by? Let's see, finance has gone down by 23%, right? 23%. So finance has gone down by 23%. FMCG normally it's a workhorse. Roti, kapda or makan normally will not have much impact, but let's see how much it has gone down. It has gone down by 20%. Okay, IT, let's say IT, if you see from the peak, it has gone down. It is still here. It has gone down by 11%. As of today, pharma is down. Sorry, pharma is down by 15%. I think, okay. Metal is almost at the same level. Like it's from here to here, it's almost like 4%. Media, 18%. Energy, okay, it is around 4 to 5%. Let's say energy is 5%. PSU banks is down by 20%. Private banks are down by 22%. And reality is down by, no, these are the major. There must be a chemical index also, but right now it is like reality has gone down by 27%. Okay, so now can you see this sheet? I've just measured the percentage and I have kept it here. And I'll just expand it and make it larger. Okay. Can we say that this IT sector, metal sector, and energy sector have gone down the least? Can you see this? Out of all this, can I say that energy, IT, metal, and energy, out of these three sectors, like out of all the sectors, these three sectors have gone down the least? Yes. Now, if we say these sectors have gone down the least, that means in spite of all this occurrence of war and all everything, there is a likelihood that some stocks out of these three sectors are likely to go up. Agreed? Because they have not gone down much, it is likely that whenever the situation improvises, there is a possibility of it going up. Yeah. Now, metal and energy can still be dependent on oil prices, maybe dependent on metal supplies and everything. So I will not go into that. I'll take the IT sector as an example because IT sector is not dependent on oil and all. Agreed? So what I will do is I'll go for the analysis for the IT sector because this is the third IT sector. You can go for the metal, you can go for the energy, and you can go for other uh, sectoral indices also in the same manner. I'm just telling you one sector. I will pick up the least impacted sector. One of the three sectors I will pick up IT, because again metal and energy might be fluid because of various reasons, because of the oil prices and all. It may take some time to reflect the true picture, but IT is reflecting a much better picture as of now. So we will go ahead and take the IT. Yeah, so Sandeep is saying IT may be going high because of the dollar price increase. Yes, definitely. It is, it might be going high because of the dollar price increase, and it might be stabilized. Metal will also be similar and all that. I agree. But let's see within IT, which company is benefiting the most. So now which companies belong to IT? Now, if you go to IT here, sectoral indices IT, can you see the NSE website? Okay, now stock watch, if you see the IT, if we open it into new tab, and this is the IT. So let's bring it the IT into one more new list, IT list. Okay, let's just save, and in IT list, let's have LTSS, LTI, LTSS, LTTS, sorry, can some, okay. Now, Mindtree, TCS, Techem. Okay, Mindtree, TCS, Techem. Then we have Infi, we have Wipro. Okay, what else is pending? Wipro, Coforge, and Coforge, HCL Tech, Emphasis. Forge, HCL Tech, Emphasis. Okay. Tech Mahindra is not there. I don't think Tech Mahindra is here. Tech Mahindra is, Tech M is here. Yeah, yeah. Tech M. Okay, great. So now we have these companies here within IT. So what we are trying to do is we are going into IT, we are further going into the IT details, and now let's see visually which IT company has sustained, right? Which IT company has been able to sustain from the top. So this is 19%. I have added? No, I have not added. Okay, Tecem I'll add. Okay. Is it done? Yeah, okay. LTI, this is 15. LTTS is how much? 19. LTI is 15. Mindtree, Okay, 20. TCS is 10. I'm doing it on chart. It's little time consuming, but just I wanted to present a visual picture how to go about it. Otherwise, you can download the data and straight away do it from the data itself, Excel itself. It will take lesser time for more stocks. Now, TechM looks to be 20%. Okay, emphasis how it is 13%. Okay, Chill Tech, it is 14%. I'll bring it down. Okay, Coforge, it is 21%. Okay, Niche, Wipro, 19%. Okay, Infi is going up 8%. TCS is 10%. Okay, here Mindtree, it's 20%. Okay, going here. LTI, it is 15%. Okay, it goes somewhere here, and LTTS is here 19%. It will go somewhere here. So ultimately, you will find that yeah, 14-15%, Infosys 8.9. So clearly, if you see overall, if you are looking for the IT sector, and within IT sector, if you are looking to invest, TCS, as of TCS and Infosys are clear winners. So if you want to take advantage of this situation and invest into the companies which are able to sustain, this is one way if you want to go on a sectoral analysis. So here we have a clear winner, right? So we have gone through two processes. One process is we have gone through the which sectors are doing good, right? The step number one was among all sectors, which sectors have survived this war, and there are it is likely to to survive the war in coming future. That is the step number one. Step number two is we go within those companies, within those sectors, and see which of these are going to have still sustained at a higher level. So this is the step number two, where by going into the sector and leading companies we take within the sector, we will be able to find the companies which have gone down less or may have gone up more. And then we can keep them in our focus, and as they increase, we can invest into that. Everyone good? So far, so good? Same process you can apply for every time there is a market crash, every time there is a correction. Like we all know there was a correction in 2020. You will find that there is always, every year, January, February, there will be a correction, and every year there will be some leader. That leader is decided around March, and that leader is decided that okay, this year which companies are likely to go up. The same process you can follow every year. Whenever there is a market correction of 10, 20, 15%, 15 to 20%, you can go through this process and find the companies which are showing the strength. That is point number one. Second is, if you follow the same thing, if you follow, you can as well do on screener, but it will give you a little, it will take little more practice to find that. And what you can do is, you can go create new screen and write down, down from 52-week high, less than 25, less than, let's say, 15%, and market capitalization greater than 1000. So we don't want any, and you will get, so you can further filter it out based on the fundamental analysis, and you will find lots of companies which have not gone down. You can even say, okay, 15% ko, you can even say 10%, and you will have 53 companies. If you want to further filter down, you can further filter down to, let's say, 5%, and you have 14 companies. So whenever there is a market crash, and if you want to find out companies which have shown strength in spite of the fall, then you can make a filtration and find out few companies. These companies maybe are showing strength. There is a likelihood that when market starts turning around, what will happen to these companies? So when the market starts turning up, what will happen to these companies? They will show greater strength. So this is one way of identifying the companies which may show strength in coming future. As soon as the market turns around, these are the companies which are likely to show strength in the coming days. How many of you found this technique good, simple? Simple technique, not very, and we are using the chart, right? We are not using any data, no analysis. Market is doing analysis for us. So market is only telling us which companies are likely to go up in when the markets actually start turning around. You can do this every March, when after the crash you can do it. Fine. So great. Okay. So sorry, today I have to close the webinar little early, so I'll not be able to take questions. Next coming Thursday, we'll take a similar topic and we'll take the questions of this session as well. So sorry for not taking the questions. I know there are few questions, but I have to rush. Uh, I have to close the webinar little early today. So thanks a lot for joining. I know you all have really busy times. Offices have opened, schools have opened, and still you joined today. Thanks a lot for joining. See you all on coming Thursday. Thank you. I'll be uploading all the sessions. Don't worry. Today, tomorrow, I'll be uploading. Thank you. Thank you so much.